You need to know this. By the end of this decade, 200,000 banking jobs in Europe could be gone. Over the next few years, 1 in 10 banking jobs could vanish as artificial intelligence moves from the back office to the front line. According to an analysis by Morgan Stanley reported by the Financial Times, more than 200,000 banking jobs in Europe could disappear by the year 2030. That is roughly 10% of the workforce across 35 major European banks. This is not about a recession or a financial crisis. It is about efficiency. Banks are increasingly using artificial intelligence to automate work that was once done by people, especially in back office roles like operation, risk management, compliance, and customer service. These jobs involve structured, repetitive tasks such as checking customer identity documents, monitoring transactions, and producing regulatory reports. Banks estimate that artificial intelligence can deliver efficiency gains of between 20 and 30% in these areas. For large institutions, that translates into billions in saving. Some banks have already started cutting. In the Netherlands, ABN AMRO plans to reduce its workforce by around 20% by 2028. In France, Société Générale has warned that no part of the bank is off limits. In the United States, Goldman Sachs has slowed hiring and automate call processes, a model many European banks are now watching closely. The timing matters. European banks have spent years under pressure with high costs and shrinking branch networks. Around 40% of bank branches have closed since the global financial crisis, and artificial intelligence is accelerating that trend and more services move online. Not every job is disappearing though. Roles that require judgment, negotiation, and accountability, such as complex corporate lending and wealth management, remain harder to automate. At the same time, banks are hiring more people in areas like data engineering, artificial intelligence, governance, and model risk oversight. Europe's regulators are also slowing the pace. Many banking use of artificial intelligence are classified as high risk under European Union rules, meaning banks must keep humans in the loop and prove that systems are fair, accurate, and explainable. For customers, the upside is faster decision and shorter waiting times. The downside is fewer physical branches, raising concerns about access to banking services in rural and older communities. The big picture is this: European banks are trying to cut costs and modernize without losing trust or expertise. The next few years will show whether they can use artificial intelligence to become more efficient without hollowing out the human skills that still hold the system together. I'm Zach Hill, and this is Lion Herald Briefing.